evening everyone. Welcome to BISP trainings. I am Faiza Alam, working as a functional consultant at BISP. BISP is a tech company providing technological solutions across the world. In today's session we will be having a NetSuite overview, under which we will get to know about the journal entry, what are the journal entries, and then we will move ahead towards how a journal entry can be passed in NetSuite application, and at the end we will have an overview of the reversing journal entry and how can we reverse this journal entry in our NetSuite application. So let's begin now. First, we will know what a journal entry actually is. So, a journal entry is used to record a business transaction in the accounting system in order to track the financial position of the business. In very simple terms, I will say that it is the act of keeping and making records of any transactions that shows a company's debit and credit balances. Since this we can say that journal entry is based on the double entry system, which says that all the debit amounts should be equal to all the credit amounts. So journal entries are the foundation for all the other financial reports that are there in the business. Along with it provides important information that are used by the auditors in order to analyze how financial transaction impact a business. Relating to the cash inflows and outflows and all. The information that is recorded in a journal includes sales, purchases, expenses, revenues, movement of cash, inventory and debt, and the other transactions also. Journalizing is an essential part of record keeping, since we all know that it is the first step in the accounting life cycle. So it is an essential part of record keeping, which allows for concise reviews and record transfers for the accounting process. We can see in this picture the first step which is there in the accounting cycle is after collecting all the records and analyzing the business transactions, we can see it will be journalized. It means that after the collection of the data, the journal entry is passed, which is the second step in the cycle, and from that journal the transactions will be posted to the ledger accounts, and this is mainly done for preparing a trial balance. Trial balance we can see in the fourth step, trial balance is prepared, but it is without adjustment. After the preparation of trial balance, the adjusting entries are made, and then when the adjusting entries have been made, so again a trial balance is made, which is adjusted, and from that adjusted trial balance we will be having the financial statements, that are the income statements, balance sheet and cash flow statement. So after that, after the preparation of the financial statements, the closing entries, closure of the entries are made, and then again its posting is made in the trial balance, and the reversing entry is passed. So this is how an accounting cycle works in the organization. As we are about to know the journal entries, so there must be some rules for accounting. Basically there are three kinds of accounts that are there. So first is the personal account, then the real account and the nominal account, and these accounts are followed by certain rules. Like if we take into consideration the personal account, so the personal account rules are applicable to any particular person, or I would say a group of person. Its rule says that debit the receiver and credit the giver. We can take an example like if a sales transaction has been made with a person whose name is Manish, so a journal entry will be for it like Manish debit to sales. So this is how a personal account rules are followed. Moving towards the real account rules are applicable with the cash and the various assets that are there in the business, like current asset, fixed assets, the non-current assets and all, which which says that debit what comes in and credit what goes out. This is the rule for real account. So here we can take the example as it is a real account. So its examples can be seen in the cash, bank balance, stock of goods, purchases, sales. As I've told you that assets are also taken into consideration. So plants and machinery will also come, and many more accounts will be coming over here. Next, moving towards the nominal account, it is mainly concerned with the expenses and losses and incomes and gains that are there in the business, and its rule says that debit all expenses and losses and credit all incomes and gains. We can take a very simple example of it, like for nominal account we can have the general and administrative accounts debited to cash account, and similar thing we can do with the incomes or revenues, I will say. So here we can take an example of cash account debit to revenue received account. So this is how the rules work in the journal entries. So moving on to the NetSuite application, where we have to pass a journal entry. So this is my NetSuite dashboard. Here I have been logged in as an administrator. So for passing our journal entries in NetSuite, there are two ways around. First is we can pass a journal entry via CSV import, or we can manually create a journal entry. So we will be taking the second option. I will be passing a journal entry manually, for which I will be going under the transactions, financials, and make journal entries. So here we can see a journal form has opened up before us. We have to make some changes, like the first thing, the fields that are marked with the abstract signs are the mandatory fields. The first thing that we have to do over here is to change the form from custom to standard. I will be selecting here a standard journal entry form. After that, we can see the date is already been taken at the exchange rate. After selecting the custom form, we have to select the subsidiary, for which subsidiary we want to pass this journal entry. Like I will be taking here BISP UK HQ, and you can see that as soon as I have selected the subsidiary, the currency is already populated over here, which is a GBP, Great British Pound. Exchange rate has already been here. Being an administrator, I do have the permission to mark this entry as approved, so I will be marking here as approved. You can see the date is already been taken up, the posting period, which is for March 2022. The another thing to note here is that we can the journal entry we can pass is for today's date and for back date only, also, sorry. I can take here 2nd of March. So we can pass a journal entry for any back date as well. If we want to give a memo for it, we can give it over here. Like I would be taking here the accrual entry March. If we go down, we have mentioned the memo, which is an important field, selecting an account, for which account we want to pass this journal entry. So I will be taking here the cost of goods sold, and put the amount in the debit column, like 5000 GBP. If we want to provide any department, class, or location name, we can provide it over here. These are not the mandatory field. Memo We have mentioned the memo above. We can, if we want to, we can provide the memo over here as well. The second account, like I will be taking here, is and you can see I do not have to mention the amount in the credit, it is already been taken over here. We can pass a single entry, and if we want to, we can pass multiple journal entry as well. So here I am only passing a single entry, for which you can see I have debited the cost of goods sold by rupees by 5000 GBPs, and I have credited the revenue sales return by 5000 GBP. And after after mentioning the amount, I will click on add. As we have done all the things, and we have mentioned all the things, we will simply click on save. Now you can see that the journal entry is now approved for posting. We got the confirmation that our transaction has been successfully saved. In order to view this particular entry that we have just passed, we can see that the entry number is provided over here, the posting period is here, the things that we have selected like currency, exchange rate, subsidiary and all have been taken up here. The accounts and the accounts that have been taken and the amounts that have been debited and credited are all appeared over here. And if we want to have this particular journal entry, if we want to have a view of this particular journal entry, there are many ways around. Like if we will go under the list, for that we will be going under the list. Here you can see that we have to from the list also we can have the view of the journal entry, and the other way around is we can mention the number, the journal entry, we have to mention the number of that journal entry that we have just created for now. Just a minute, we will be going back. We will go under the list. As that journal entry is not visible over here, so we will mention the number in the global search bar, like the number was 1187. So here you can see that the journal 1187 is here, and it has taken us to that page like this. So there are many ways around in order to have the view of any particular journal entry. One is from the list and the other is from the global search. We just have to mention the number of that particular entry, and if we don't remember its number, so we can simply go into the list and check out the entry. So this is how we can create a journal entry in the NetSuite application. So our next concern is reversing journal entry. So what is reversing journal entry? A reversing journal entry is an adjusting entry which is made for being reversed as on the beginning of the accounting period. It is mainly called as a reversing. It is also called an adjusting entry just because it is made for reversing the effect of any transaction that has happened in the previous accounting period. We can take an example like adjusting entry usually ensures that the expenses and revenues that are there for any accounting period should match up, so that in this is mainly done, and adjusting entry is mainly passed so that we can get an accurate income statement and balance sheet. And it is also mainly done for removing the effect of any accrual transactions that has occurred in the preceding period. We can take an example like if we have incurred some expenses in the business and we have not paid those expenses, so it will become accrue in the preceding period, and we don't want to show these expenses, these accruals in our present in our current period. So for that we have to pass a reversing journal entry so that it will be removed from the records. So reversing journal entry reduces the chances of double counting revenues and expenses for the current period, and it also allows a more efficient processing of the actual invoices. It will be clear to you with this example. We can see that for the month of October 31st, the interest expense, this is an accrual, the interest expense that is accrued in the month of October, um, as it is an accrual transaction, so we want it to be reversed, we want this entry to be reversed. So you can see for the month of 1st November, the first day of the November, it has been reversed. The interest payable account that has been credited for the month of October has been debited over here, and the interest expense that has been debited in the previous month, you can see for the purpose of reversal it has been now credited. So this is how a reversal entry can be passed in order to remove the effect of any transaction. Going back to the NetSuite application, here we will be going back to the home page. Since we want to reverse any particular journal entry, so again we will be going under the transactions, financials, make journal entry, and list. So here you can see a list of journal entries is appeared before us. If which entry we want to reverse, we can take any of it from here. Like I will be taking here that entry that I have just passed now. So I will click on edit. So as I have to make a reversal of this entry, so first thing I have told you that we have to do is to change the form from custom to standard. Entry number is already here, currency subsidiary is already here. We will go down and see the accounts that cost of goods sold has been debited and revenue sales return has been credited. We just have to mention a particular date for reversal only. Posting period is also here, as we have to mention the reversal date. So like I want this particular journal entry to be reversed on 8th of March, and this refer entry is like we also have to change the memo for it, like I will, as it is a reversal, so we have to change it accordingly. So what I was telling is what is this defer entry? We have already selected the reversal date over here, like we want this entry to be reversed on 8th of March 2022. If I check this box, so what happens? It is already being, it will always, or it is already being reversed on this particular date. But if I check this box out, like defer entry, so it is like a memorized transaction. It will, auto submit the this particular date, and on this date we will be provided a defer entry number, for which we have to click on the save option. So I am clicking here. We can see that our this transaction has also been, approved for posting. uh, we can see that the reversal date is here, and on 8th of March, when this entry will be reversed, at that time this box will provide the defer entry number. It will automatically be, this number will automatically be generated over here. So this is how we can reverse the journal entry. We will go down, we can see that the accounts that have been debited over here and credited over here on the 8th of March, these accounts will be reversed. These accounts, or I would say the amounts of it, will be reversed on 8th of March, and its reversal number will be provided over here. So this is all about for journal entries, reversing journal entries, and how can we pass a journal entry in our NetSuite application. In case of any questions, queries and consultations, feel free to write to us at www.bispsolutions.com. Thank you.